What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I went big today, and I'm going to tell you, when it comes to dividend investing, you either go big or you go home, because I can tell you people are like, well, dividend investing, this and this, I'm not going to make a lot with dividends. Well, you're not putting enough in. You're not putting enough effort in to see that dividend snowball effect kick in. So that's like people that put like 2% in like their mutual fund, when they're and they get like a 2% matching or 3% matching at their employer. Well, I always put 6% in and have somebody match, 3% or whatever it is, because the compound interest and the snowball effect kicks in a lot faster, and your portfolio gets a lot bigger. And with these dividend stocks that I bought, these guys have excellent dividend growth. These guys are hot dividend stocks, and I'm going to explain to you why I bought each one. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Like I said before, smash that like button, and let's check these dividend stocks out right now. The first dividend stock I bought today was Kroger. It's sitting at $47.86, a dividend yield of 2.42%. A PE ratio of 13.76. The average volume is 5.17 million. Market cap is 34.35 billion US dollars. G range is $41.82 to $52. Stay range is $46.94 to $47.87. And its previous close is $46.98. So previously I explained to you why I bought Kroger. I really like these guys. I mean, they're expanding, they're getting bigger. They're powerful. They're always busy in the stores. And guess what? They're beating the S&P 500, which is even more attractive, especially if you want to increase your net worth or net asset value. This is actually a stock in the past 5 years that has beaten the S&P 500. That's very attractive. Another thing that's very attractive is their revenue trends and their dividend history, which I'll reveal to you. So what really attracts me with these guys, first off, is these guys have increased their revenue over time, but reading the past 2 years, their expansion plans is what really excited me as well. So 2022 and 2023 was very attractive. So annually, this is in millions US dollars. 2017 was 115,000. I'm just going to say the first three numbers. 2018, 123. 2019, 121. 2020, 122. So 2019 to 2020, there's an increase, and then 2021, there's an increase, 132. Then 2022, 137. And then 2023, revenue has increased from, if you start at 2017, 115,337 to 2023, 148,258. So there's a huge increase in revenue. And usually when there's an increase in revenue, the board of directors feel very confident in hiking the dividend. We're going to go over the dividend history. So I'm going to start quarterly with the dividend distribution. 2011, it was 11 cents to 12 cents. And then 2012, it jumped to 15 cents. 2013, it jumped to 17 cents. 2014, it jumped to 19 cents. 2015, 21 cents. And then you see they do have a stock split history, which is also attractive. So it was 11 cents to 12 cents. Then 2017, 13 cents to 14 cents. And look at that special dividend 2018. 2019, 14 cents to 16 cents. And then 2020, 18 cents. In 2021, 21 cents. 2022, 26 cents. And then 2023, it jumped to 29 cents. So it has a very low payout ratio, which is very attractive. And that dividend growth in 5 years is 15.79%. This is why I capitalize on these guys. Once I start seeing some of my dividend stocks that I own that are a little bit slower with dividend growth, they're on the chopping block, and then I buy dividend stocks like this. And I'm going to reveal to you next week 2 dividend stocks that I sold because of the dividend growth trends. It wasn't very attractive. With these guys, with Kroger, the number of dividend increases in the last 5 years is 6. If you bought one share, you made 104 with a 2.21% dividend yield. So don't always chase yield. I sometimes like high yield dividend stocks. I take a risk in dividend stocks like ARK, Fidus Investment Corp, which I kind of changed the distribution on M1 Finance. I'm very attracted to those guys. You know, the business development companies and high yield REITs, those are a risk. So I'm just letting you know I'm taking a little bit, I got to have a balance of a conservative approach and an aggressive approach. So these guys have the conservative approach with nice dividend growth. Now we're going to jump to the next dividend stock. And this is another dividend stock that I had to capitalize on right now. And again, as I told you before, I'm going after the financial sector stocks. T Rowe is one that's very attractive. These guys are taking a hit against the S&P. And some of them were beating the S&P, but now they're taking a big hit, and this is why I'm just jumping on these guys and buying them. T Rowe is sitting at 120.25, a dividend yield of 4.06%, a PE ratio of 19.72, average volume 1.35 million. The market cap is 27 billion US dollars. The year range is 93.53 to 134.64. Day range was 119.41 to 121.03, and its previous close was 121.27. So I'm going to jump to the revenue trends and dividend history. And everybody knows who T Rowe is, so I'm not really going to give these guys an introduction or review. So let's check out the revenue and dividend history. So these guys have been a little bit of a surprise, but I feel very confident in my investment with these guys. And again, this is not financial advice, for entertainment purposes only. Disclaimer in the description. I'll say that 1,000 times. 2016 annually in millions US dollars, 4,284. 2017, 4,854. 2018, 5,372. 2019, 5,617. 2020, 6,206. 2021, an increase at 7,671, and then 2022, a little bit of a drop at 6,488. I'm not too concerned. I feel very confident in these guys that they will rebound and make a lot of money, which will hike their dividend. And so this one's a little bit of a risk, but I'm going to reveal to you one more thing. So right now, with the big hit that they took, I'm going to jump the gun on these guys. So the recent quarterly report, revenue was 1.54 billion. It was down 17.47%. Net income was 421.5, down 25.78. Diluted EPS 1.83, 24.07. It went down. Net profit margin, it went down to 27.41, 10.07. Operating income 434.6, 47.8. Net change in cash 311.5 to 32.34%. So they have been down, but I'm going in and seeing what happens. So I'm going to jump to their dividend history. Their dividend growth is extremely solid, and I'm going to go over this quarterly. This is a quarterly dividend. So 2009 it was 25 cents, 2010 it was 27 cents, 2011 it was 31 cents, 2012 34 cents, 2013 38 cents, 2014 44 cents, 2015 52 cents, and you get a special dividend right there at $2. And then it jumped to 2016 54 cents, 2017 57 cents, 2018 70 cents, 2019 76 cents, 2020 90 cents, 2021 108. You get a special dividend in 2021 at $3. Then it jumped to 120, and then it jumped to 122. So their payout ratio is a little bit high right now. So I just want to let you know that this is a risk one. Their payout ratio currently sits at 69% of its earnings. So of course, a payout ratio that's lower is a lot nicer, but this is something that I feel very confident in, and I'm taking a risk buying these guys. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years is 14.44%. If you bought one share, you made $4.88 with a 4.02% dividend yield. I'm just letting you know I'm taking a risk in this one. I'm going after the financial sector stocks. This one, I'm absolutely going in. So let's check out the next dividend stock. And Target's the next dividend stock that I bought as well. It's sitting at 134.64. I just posted a video on these guys, kind of did a speed run on them. Dividend yield of 3.27%, a PE ratio of 22.90, average volume 5.87 million. The market cap is 62.14 billion US dollars. G range is 125.08 to 183.89. Day range is 132.48 to 135.29. And its previous close is 132.70. So what I like about Target is it has pretty good dividend growth. I'll go over that, but it has done well against the S&P as well. It's actually beat the S&P in the past 5 years, which is very attractive. Now I'm going to jump to its revenue trends and dividend history. So revenue-wise, these guys have done fantastic. This is annual millions US dollars. 2017, 70,000. 2018, 72,000. 2019, 75,000. 2020, 78,000. 2021, 93,000. 2022, 106,000. And 2023, 109,000. Again, annually in millions US dollars, that is a huge increase in revenue. Now let's jump to their dividend history. So I'm going to start in 2011. It was 25 cents quarterly to 30 cents. 2012, it jumped to 36 cents. 2013, it jumped to 43 cents. 2014, it jumped to 52 cents. 2015, it jumped to 56 cents. 2016, it jumped to 60 cents. 2017, it jumped to 62 cents. 2018, it jumped to 64 cents. 2019, it jumped to 66 cents. 2020, it jumped to 68 cents. 2021, it jumped to 90 cents. 2022, it jumped to 108. And then 2023, it jumped to 110. Now, the payout ratio is a little bit high. I am still not concerned. There's some negative news going out there, but this is something that I capitalized on with the huge dip. So again, a payout ratio, basically 74% of its earnings is basically distributed, if you want to sum it up and be very straightforward. So if you bought one share, you made $4.32 with 3.26% dividend yield. The dividend growth in 5 years is 13.016. And the number of dividend increases in the last 5 years is 6. So let's jump to the final dividend stock. So a quick learning lesson I just want to give you guys is dividend payout ratio. That's where you take the yearly dividend per share and divide it by the earnings per share, or dividends divided by net income. So I just wanted to give you that tidbit real quick with payout ratio. Now let's jump to the final dividend stock. And the final dividend stock I nabbed was Starbucks. It's sitting at 188 with a dividend yield of 2.10%, a PE ratio of 32.70, average volume 6.77 million. Market cap is 115.65 billion US dollars. G range is 80 to 115.48. Its day range was $100.70 to 102.48, and its previous close was 101.83. So these guys have done well against the S&P. They are making a comeback. In the past 5 years, they've destroyed the S&P 500. It's very interesting. And don't forget, they have a stock split history. So let's jump to their revenue and dividend history. So check out their revenue annually in millions US dollars. These guys have jumped up like crazy. 2016, 21,000. 2017, 22,000. 2018, 24,000. 2019, 26,000. 2020, a little bit of a dip at 23,000. You can see that. You can blame the pandemic. People are being extremely frugal and fast because of money issues. 2021, 29,000. And 2022, 32,000. So they have a stock split history, and the revenue's gone up, and they've beaten the S&P 500. That's attractive. Now let's jump to their dividend history. So I'm going to just start in 2011. It was 13 cents quarterly to 17 cents. 2012, 21 cents. 2013, 26 cents. 2014, 32 cents, and a stock split. And then they went back to 16 cents, and then 2015, 20 cents. 2017, 25 cents to 30 cents. And then they got back to where they were at 36 cents, which is quite impressive. Then 2019, 41 cents. 2020, 45 cents. 2021, 49 cents. And 2022, they cracked 53 cents. Their payout ratio is a little bit high. I'm not too concerned. It's at 68%. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years is 9.68%. So if you bought one share, you made 212 with a 2.08% dividend yield. Now the dividend's a little bit low, the dividend yield, excuse me, but the dividend growth is pretty solid. Now I'm going to jump to how many shares I bought. And here's my buys for today. I bought $362.57 worth of Kroger, $350. So here's my total buys for today. I bought $362.57 of Kroger, $350.39 of Target, $357.16 of Starbucks, and $295.82 of T Rowe. Regarding Kroger, that is a total of 7.68. Target, that is a total of 2.63 shares. And then we're going to go back. Starbucks, that is a total of 3.51 shares. And T Rowe, that is a total of 2.44 shares. So I'm going to jump to my disclaimer. I wanted to show you how many shares I bought today, and I went big. And like I said, you better go big or go home when it comes to dividend investing, because people are saying you're not making much with dividends. You're not putting the effort in, and you're not putting the money in, because I'm telling you, I'm seeing the results. I'm making around $700 a month in dividend income, and that's just growing. We'll see how this month goes, but things are looking really good. So I'm going to jump to my disclaimer. So as a reminder, my channel is not financial advice. This is for entertainment purposes only. Seek a professional financial advisor if you are seeking financial advice. If you ask me for financial advice, I'm going to tell you I am not giving out financial advice. My channel is for fun. I show you my dividend investing journey. I show you my gains, losses, passive income. I'm very transparent with everything. So I'm not going to tell you what to buy. I love showing you my dividend investing journey. I love showing you my buys and sells. Now, there's some dividend stocks that I may have bought in the past that I may have sold. So again, I'm not giving any financial advice. I have made some losses in the past. I have made some big gains. So you have to use your due diligence when it comes to investing in these stocks. These 4 dividend stocks I bought, I currently own in my M1 Finance dividend portfolio. That may change over time. This is why I'm telling you this is for entertainment purposes only. And I enjoy revealing to you my dividend investing journey. And I love showing you stock analysis and dividend stock analysis videos. I like to invest in high yield dividend growth stocks and dividend growth stocks. So I like to have a combination of things. But I really enjoy watching you guys comment in the comment section. So make sure that you do when you have a opportunity. And I really enjoy interacting with you guys. I'm very looking forward to going live and doing a lot more collaborations with people once I'm done on August 4th. So this is just basically dividend investing journey. This is very close to phase 2, and you'll know what phase 2 is about. Just take a hint what phase 2 is going to be about. That's probably going to be tomorrow with phase 2 of my dividend investing strategy for M1 Finance. You guys take